Hello, 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 everybody. How are you doing today? Very, very well, I hope. First, I want to thank Tikwa so very much for inviting me into her community. I'm so happy to be here with you guys today and share some tips that you can use to help you file an accurate tax return. Now, just to give a brief introduction, my name is LaShaun Lolu. I am a certified tax accountant. I've been a tax accountant for the last 6 years, and I help middle class families who are really struggling to make ends meet to find all the credits and deductions that are applicable to them so that they can pay off those bills, finally take that vacation, and experience more joy in their lives, right? And one of the reasons I'm here is that I really like working with entrepreneurs. Entrepreneurs are like the lifeblood of the country, of the economy. But I realize that a lot of entrepreneurs just don't know what to do, when it comes to filing taxes. A lot of times they're overwhelmed. They try to self-prepare their taxes because they think they're saving money. But a lot of times they're doing things that are causing red flags. So basically that are causing them to get audited on their tax return. So today I want to share with you guys 5 things that you can do to avoid getting that red flag, getting the audit, and basically preparing the best tax return you can if you're going to do it self-prepared. If you guys have any questions at all while I'm doing this, just drop it in the comments. People will let me know, and I'll be happy to address them. So the first thing I want to tell you guys is when you're filing that tax return, you want to make sure that you do not file your personal tax return separately than your business. And I noticed that a lot of entrepreneurs, when they're just getting started, they do this. And I think that they think that they're supposed to file separately. But unless you have an S Corp, and you would know if you have this because you would have to elect to do this, you need to file your business taxes on your personal taxes. So what you're going to use is a schedule called the Schedule C. All right, so you'll file your personal tax return, and then you'll just add another schedule, the Schedule C. So you want to make sure you have that Schedule C attached onto your personal tax return. And that's going to make sure that you file an accurate tax return for your business. So that is my first tip. Do not file separately your personal and business taxes. All right? Tip number 2, do not use round, even numbers when you're giving your income or expenses. So, true story, y'all. I had a client. This was actually my aunt. And like I said, I've been doing taxes for the last 6 years. But when you have family members, they're like, I'm going to let you test the waters. I'm going to make sure that you're actually a professional before I come to you and do my taxes. So that's what she did. Last year was her first year coming to me. And when I get a new client, I like to look at your history. So I said, give me your last couple of years of tax returns. And I do this because the IRS has algorithms, right? They're looking for patterns. So if you're doing something a couple of years, you're filing one type of way, and then all of a sudden you do something differently. And I don't want red flags for my clients. So I always ask for those couple of years back tax returns so I can make sure everything is looking the same. We're not doing anything out of alignment to basically save my customers, cover their ASS, right? So I'm looking at her tax return, and everything is like even numbers, y'all. How much income did you make? Oh, $100,000. How much was your rent? $26,000. Everything was even numbers. And I know that it's easier to do that when you're filing your taxes because it's easier for you to compute. But in real life, how many things are in round numbers, right? How many times is everything, just so simple and so easy? It never is. So anytime you're doing that with the round numbers, I can guarantee you guys that is a red flag to the IRS. It's basically telling them like this person is just estimating, guesstimating at the figures. Because if you are actually a business and you're actually making income and have actual expenses, it's never going to be that clean and easy. So, just make sure that you're aware of that. I'm not telling you to make up numbers, right? You definitely want to have your figures correct, but do not use round numbers. If your income for the year was, let's just say, $43,000, maybe 39,957 might be a better amount to put, right? Just be smart about it. Don't use round numbers because you're asking for an IRS audit. If you guys have ever been in an IRS audit, let me know in the comments. I'm just curious what that process was like for you. But my second tip is do not use round numbers when you file your tax return. All right, moving on. Tip number 3. Now, like I said, a lot of you guys are independent contractors or entrepreneurs. Tikwa did tell me this is for her virtual assistant community. So I know a lot of you guys are working as independent contractors, self-employed. If you drive, and I don't know if you guys do, but if you're somebody that uses your vehicle for work purposes, you can and you absolutely should deduct those expenses on your tax return. Now, this is where a lot of people go wrong when they self-prepare. When you're deducting those expenses, it's either you use your actual expenses or you use the mileage, right? So either you're writing off gas, oil changes, repairs, or you're writing off your mileage. You cannot do both. 9 times out of 10, what I've seen working in this profession is the mileage is going to be more beneficial to you. So instead of saving all of those gas receipts, oil changes, this and that for repairs, I would advise you to instead keep a mileage log, or you can download an app called Mile IQ. That's Mile IQ. And this app is really, really good if you're somebody that travels a lot for your business, because you just download the app one time. Anytime that you're traveling for work-related purposes, you click the button, it's automatically going to track your mileage from to there, right? So it makes it really easy when it's tax time to collect those miles. So remember, my third tip, if you're using your vehicle for business purposes, you're either going to deduct actual expenses, that's gas, repairs, tolls, anything like that, or your mileage. And remember, mileage is usually going to help you best if you use it for work purposes. Now, I do want to put this in there. If you're using your mileage, you cannot use it from just commute into your place, your office, right? If you just go to office every single day, you can't count those commuting miles because, I mean, you have to drive to work anyway. The IRS does not acknowledge that. But let's say you're a CNA or, just somebody who has to drive from a client home, a realtor, somebody has to drive to different client homes, then you can deduct that because you're going to a different place every day. So as a VA, if you go and visit your client's house, right, you have to work different locations. This is something that would be beneficial to you, right? So that is tip number 3. My fourth tip is the home office deduction. Now, I wanted to put this in here because I know as a virtual assistant, a lot of you guys are working virtually, so you might be working from home. So as somebody who's working from home, you can absolutely, if you have a home office, and the IRS is very specific, right? So it has to be a space that you have in your home that is used exclusively for your business, right? And quick story about this, y'all. I had a client who used the home office deduction, right? They have a home office in their home. And she, it's a rather big office space, right? And she put a lot of expenses on there. And this is somebody who self-prepared before she came to me. And so she was audited by the IRS, where this is very rare, but it happened. She was audited by the IRS. They actually came into her home and they wanted to see the office space that she had. And she had a baby bouncer in there because she had a newborn baby. And so she would have her baby in the office while she worked. And because they saw that baby bouncer in there, they didn't allow her to use that home office deduction. So just be aware that if you use a home office deduction, it has to be a space that's used exclusively and solely for the purposes of your business. But if you do have that, then you can write off a percentage of your rent or your mortgage, any bills that you have. I'm talking about electricity. I'm talking about internet. I'm talking about phone bills. If you, let's say you did some repairs to your home and you have to paint your office space, you can deduct the cost of that. So that home office deduction is really, really valuable to you. If you are somebody that does have a dedicated space in your home for your business. And a lot of people miss out on that deduction really because they don't know about it when they're self-preparing. So if you guys are going to self-prepare your tax return as one of TQA's lovely virtual assistants, make sure that you take advantage of that home office deduction. If you guys have any questions about it, because there are some rules that apply, like you have to figure out the square footage of your home and the square footage of that office space. You can just contact me, feel free, and I can go over those with you. So that is my tip number 4. Be sure to use the home office deduction when you file your tax return. My 5th and final tip for you guys is to make sure that you just keep up with all your deductions. Now, this might seem like an easy one, a no-brainer, but guys, did you know 93% of entrepreneurs are missing out on a lot of deductions? Like they are overpaying in taxes, or they're not qualifying for all the credits and deductions possible because they simply don't know what applies to them. So the biggest advice that I can give to anybody that is self-preparing their taxes, especially as an entrepreneur, is to make sure that you keep up with all your deductions. There are so many things that we can deduct as entrepreneurs. Now, if any of you guys were keeping up with the recent tax changes, just this year, it was TCJA, so the Tax Reform Act, and they changed a lot of things, but it really moved in favor of the entrepreneur, for business owners. So a lot of people, a lot of employees can't itemize or deduct a lot of things, but as entrepreneurs, we still can. So for example, if you had that home office deduction, you can use your vehicle expenses, you can use any expenses that you have related to your business. So as a virtual assistant, maybe website hosting fees, if you subscribe to any type of membership, you can deduct the cost of those fees. If you travel, you want to keep account of that. Now, it has to be for business purposes, but you can deduct the cost of those fees. You can deduct the cost of basically anything that you use for your business that the IRS considers ordinary or necessary. So that's basically anything, P.O. boxes, Wi-Fi for your business, your cell phone if you're using it for your business. There's so many things, guys. And I do have a guide. It's a free guide that is solely for entrepreneurs that kind of gives you a list of everything that you can deduct so that you can be sure that you are getting the most bang for your buck. You know, when it comes time to file your taxes, that you're not overpaying. I don't know about you guys, but I feel like, Uncle Sam gets enough of my money. Every time I look, I'm paying taxes for something or another. So I'm not going to just freely give the IRS so much of my money, right? We want to keep that in our pockets. So I will put a link to that guide in the comment section, or I'll give it to Tikwa so she can share it with you guys. You can download it. It's absolutely free, and it's going to give you a list of all the things that you can deduct that you might not have thought of. So that was my 5 tips for you. I'm just going to run through it again. My computer went dead, but I think I remember all of them. The first one is I'm just going to go through it as I remember it, all right? Do not use round numbers, okay? That's my biggest tip for you guys. Do not use round numbers on your income. Do not use round numbers on your expenses. I want you to round up, round down, round all around, but do not use those 0, 0, 0, 0 because you're asking for an audit, right? Another thing that you want to remember is to take advantage of the home office deduction, okay? Definitely take advantage of that if you're somebody that is working from home. You want to make sure that if you are writing off any vehicle expenses, you're either using actual expenses or you're using the mileage. You cannot use both, okay? So either miles or actual expenses. And remember, miles is going to be the best for you almost every time. You want to make sure you're keeping up with all your credits and deductions so that you can make sure you're filing an accurate tax return and so that you can get the most money possible back on your tax return. And the fifth one was, who can remember it? I'm asking in the comments. Y'all, I can't believe that it just really flew from my mind. I can't remember what that last one was, but those were my 5 tips for you guys. If you missed the last one, please go back and watch it on the replay. I hope that this information was really valuable to you guys. Being a tax accountant, it is my absolute passion to make sure that I provide my clients with all the information possible so that they, experience less stress during the tax season. Because what I found is that a lot of entrepreneurs, they either are not returns, and that's really problematic because if you don't file, did you know that you're open yourself up for an audit for that tax year for your entire life, right? So, it's better to just file than to just not file at all. If you file, let's say you missed something, you made a mistake, the IRS can only go back and audit you for 3 years from that tax year. But if you never file, it's open up for your lifetime. So I would highly suggest to you, whether you're using a tax professional or if you're going to self-prepare your taxes, just make sure that you do it, okay? Because we don't want to overpay the IRS. We definitely don't want to get in trouble with the IRS. We want to make sure that we're building businesses that are secure, that we can go and get loans from. Anytime you get a loan, they're going to ask for your tax return. If your child is going to school and you want to apply for student loans, they're going to ask for your tax return. So it's very important that we're filing a tax return, that we're doing it accurately, and that we are very knowledgeable and well equipped when we do so that we're building better businesses and we're living happier lives. So, Tiqua, that was my spiel. I hope you guys enjoyed. Let me know if there are any questions. I'll be happy to answer them.